Coming up on Business Incorporated today, Morocco's trade deficit shrinks 18.2% year-on-year. And South African state firms request bailouts over COVID-19. Egypt Air and Air Cairo sign code share agreement. Hello and welcome to the program. I'm Temple Ashaju. We begin the show with intraday numbers, of course, markets that we have right here in Africa, which were mostly positive today. And South Africa's JSE sustains the previous day's position as the highest gainer by 0.75%, while the NSE was up by some 0.04%. Now, on the flip side, Egypt's EGX30 declined marginally by some 0.08%, and Kenya, that will be the NSE Kenya Nairobi Stock Exchange, closed positive on Tuesday. In the Middle East, major markets were mostly positive except the Qatari index, which declined by 0.40%. And on the flip side, Saudi Arabia's index surged the most by 0.89% at intraday. In the UAE, Abu Dhabi's index rose 0.48%, while Dubai's main index rose 0.32%. And European stocks were sharply higher today on the back of strong session on Wall Street, despite troubling economic indicators in the region. Chelsea Delani has more for us on the program. Chelsea, thank you for joining us this afternoon.
Thanks for having me.
Right, so German retail sales fell unexpectedly in July, even as the government cut taxes to try to encourage spending. What does this data tell us about how consumers are faring in Germany?
Well, this data, along with other data we've gotten recently, really points to trouble for the German consumer. Germany has gotten a lot of praise for its handling of the coronavirus, and its economy has been less impacted than many of its neighbors here in Europe. But clearly, there's still a lot of anxiety among people here. We did see retail sales fall almost 1% in July, and that is a bit of a surprise because that's when the government's tax cut went into effect. So everyone really thought that would drive retail sales up, that it would get people spending again, and it doesn't appear to be really doing that at this point. We've also gotten data over the past couple of weeks showing a sharp deterioration in consumer confidence. So there's a lot of potential reasons for this, but it's clear that there's a lot of people aren't really confident about the economy and about their future in it. And we still have here in Germany about 5 million people on part-time work schemes, and the unemployment rate remains quite elevated by German standards at about 6.5%. So a lot of people are still facing a lot of uncertainty and a lot of anxiety about their futures, and that's keeping them out of stores and out of restaurants, out of auto dealerships, all these places that really should be seeing a lot of activity right now, and that is a broader economic concern for Germany and the broader Eurozone.
Let's talk a bit about auto side of things now. Tesla's founder Elon Musk is in Germany today and is scheduled to meet with the economy minister. What do we know that's on the radar for them to discuss?
So Elon Musk is really investing a lot in Germany right now. There's a lot of potential things that they could be talking about. Tesla announced last year that it was going to be building a plant outside of Berlin to manufacture about 50,000 vehicles a year. That was supposed to be really its foothold in the European market, but it's gotten bogged down in a lot of regulatory problems and environmental challenges, so it still doesn't have the approval that it needs to get up and running. So that's potentially one topic of conversations, but Tesla is also looking at other things in the area as well. They've reportedly acquired some licenses to potentially start manufacturing energy here, so they could become something of a power provider, using some of their factories as locations for solar panels and things like that. And also we heard from Elon Musk yesterday that he's actually teaming up to produce mRNA vaccines with one of the German companies. So a lot of different things going on here for Elon Musk right now.
We know that auto is king for Elon Musk, actually, but let's just hope that that won't take away the whole attention of a lot of investors in that space to the COVID-19 vaccine. However, still with auto side of things now, Mercedes-Benz is releasing its latest model of its luxury sedan class this period. Of course, how important is this success for the new model of this company?
This is a very important launch for Mercedes-Benz and its parent company, Daimler. Daimler is coming off a loss of almost 2 billion euros in the second quarter because of coronavirus effects. And it's also dealing with the shift to electric vehicles that's very expensive for Daimler and really all the other automakers right now. So they have a lot of expenses, they have a lot of cost, and they really need a money maker right now. The S-Class has typically been that for Mercedes. It's a very profitable vehicle. It does really well. It sells for really high price tags. So they really do need this to be a success. And it's also kind of a landmark for them because it's the first time they're introducing an S-Class as a purely electric vehicle option. They're also sort of introducing more hybrid features as well. So it's very high tech, and it's really a step forward for them in terms of environmental policy. So it's quite crucial for them that this vehicle is taken up in a success.
All right, Chelsea, thank you so much for your input on the program. I appreciate it. Let's take a trip now to London, where Juliana is standing by to give us more updates on these major markets that we have. That's one of the advanced markets. Are shares still rallying at this time following the jump in the house prices and the pickup in demand reported by Bharat Developments, Juliana?
Yes, they are. The early gains have been extended at intraday. There are triple-digit point gains on the FTSE All-Share at this time. The All-Share is up 1.47%. The FTSE 100 is up by 1.60%. And the FTSE 250 is up by 1.20%. In currencies, the British pound is down on the US dollar by 0.16%. Up on the euro by 0.28% and up on the Japanese yen by 0.08%. I've got to say, in the forex market, the dollar has seen some pretty decent gains, which have pushed down the value of the pound. So a lot of internationally exposed stock companies on the FTSE 100 are seeing rallies at the moment. GlaxoSmithKline, AstraZeneca, Diageo, Unilever and British American Tobacco have all seen their shares rise.
Juliana, it seems like it's not only houses that have been in demand lately this year, of course. Now, Lego has also reported that sales to consumers jumped some 14% in the first half of 2020 despite coronavirus. Just as we know that people, of course, have been looking for some activities to have during the period of the lockdown. Tell us more about this.
Well, gosh, there's not much more to say. You've said it all, really. But I've got to tell you, Lego have defied the toy sector gloom, which has been taking place over the past couple of years. But for Lego, this isn't a new story. Over the past couple of years, they've seen a real resurgence. A lot of cult mothers and fathers who used to play Lego when they were younger have now bought in to the Lego phenomena, which has been, and even during the pandemic, they are still seeing increasing gains. I believe the first half of this year, their profits were up 11% on the same period last year, which is the value of 3.9 billion kroner. In their announcement this morning, they also said that they've had 100 million more visitors to their sites, and simply they're putting it down to families having more time to play together. During the lockdown, people that have been working from home have been playing Lego with their family members. I've got to admit I haven't, but perhaps I'm missing out on something there, Temple.
And the UK government has been under pressure to reconsider England's quarantine rules against Greece. And of course, we've seen that Scotland and Wales have also introduced their own measures lately. Are we going to see the government bow to pressure?
Well, the short answer is I don't know. There's a term at the moment going around in Britain, and it's called travel quarantine roulette, because nobody is certain where it is or where it isn't safe to. I was speaking yesterday evening on the channel, and just before I spoke, Nicola Sturgeon, the First Minister of Scotland, announced that from Thursday, so from tomorrow morning at 4 a.m, if you are Scottish and you are in Greece, after that time and date, you will need to self-isolate if you come back into Scotland for 14 days. And it's because of this threshold and the number of cases. So at the moment in Britain, for every 100,000 people that are tested, about 12.1 individuals are testing positive for coronavirus. To travel somewhere safely in Britain and come back and not self-isolate, the number has to be below 20. So at the moment, a lot of concerns in England are focusing on Portugal rather than Greece, because I believe Portugal is kind of bouncing between 19 and 20 cases per 100,000. Spain, which was the first travel corridor to be closed, they've got about 126 cases. So it's a really fine line. The British government are, of course, advising people not to really travel unless you have to. But so far, no plans of quarantining English holiday makers who are in Greece. But if you're Scottish, you got to get back before 4 a.m. tomorrow morning if you don't want to self-isolate for 14 days.
We'll wait to see how all of this pans out eventually. Thank you so much, Juliana Olayinka.
Thank you.
Let's move on now with some market numbers. Stocks in Asia Pacific largely rose today as data showed Australia's economy has officially slid into a recession. Australia's S&P 200 led gains among the region's major markets as it jumped 1.84% on the day to 6,063.20. Australia's gross domestic products fell 7% in the June quarter, the largest quarterly fall on record. The Australian Bureau of Statistics, ABS, said on Wednesday, and of course this followed a 0.3% decline in the month of March. Elsewhere, mainland Chinese stocks were mixed, with the Shanghai Composite down 0.17%, while the Shenzhen component added 0.27%. And of course, in Japan, the Nikkei 225 gained 0.47% to close, while the Topix index ended its trading day 0.47% higher. South Africa's Kospi advanced some 0.63%, while Hong Kong's Hang Seng index slipped some 0.18% as of its final hour of trading. And U.S. stocks futures jumped early today following a strong start to September for the markets. Now, Dow Jones Industrial Average futures indicated a rise of more than 200 points at the open. S&P 500 and Nasdaq futures also traded solidly in the positive territory. And of course, the major U.S. indexes all rose during Tuesday's regular session, with the Dow Jones Industrial Average and the Nasdaq Composite closing at record highs. Crude oil futures extended gains in early trade today after a bigger than expected draw in the United States crude stockpiles, and as solid U.S. and Chinese factory activity fueled optimism of a recovery from the pandemic, boosting investor risk appetite. Brent crude futures rose 37 cents to $45.95 a barrel, while U.S. West Texas Intermediate futures rose by 34 cents to $43.10 following the previous day's gain by 15 cents. And according to the American Petroleum Institute, U.S. crude inventories fell by 6.4 million barrels in the week to August 28 to about 501.2 million barrels. Gold prices slipped earlier today as the dollar rebounded after robust U.S. manufacturing data bolstered hopes of a swift global economic recovery, robbing some of the allure of safe haven bullion. Spot gold fell 0.4% to $1,962.63 an ounce, while U.S. gold futures dropped some 0.5% to $1,963. Elsewhere, silver dipped some 0.7% to $27.96 cents per ounce, while platinum slipped 0.7% to $933.88, and palladium fell 0.5% to $2,259.52. We'll bring you more stories around Africa and, of course, other parts of the world when we return after this short break. Stay with us. Welcome back to the program. It's, of course, Business Incorporated right here on Channels Television. Well, let's look at some stories right here in Nigeria, where, of course, the merchandise trade closed the second quarter of 2020 at 6.2 trillion naira, indicating a sharp fall of 27% quarter on quarter and 27.46% year on year. Now, the latest data from the National Bureau of Statistics here also reflects a 0.39% year-on-year rise in import component to over 4 trillion naira, while exports account for 2.2 trillion naira, a decline of 51.73% when compared to the corresponding period of 2019. Now, Nigeria's trade balance for the period consequently stood at a deficit of 1.8 trillion naira, marking the third consecutive quarter of negative trade balance, while raw materials imports increased by 85.69% quarter on quarter. The export equivalents fell sharply by 56% quarter on quarter and 52% year on year. A trip out of Nigeria again. Ghanaians will be going to polls in December 2020 in what will be a true test of the country's competitive elections in the Fourth Republic since 1992, besides the elections of 2000. Now, the incumbent President Nana Akufo-Addo will be recontesting, but the question is, how has his administration performed so far? And joining me now to talk about these and more is Kwame Mensah, who joins us, of course, from Ghana. Kwame, good afternoon.
Good afternoon, my brother.
Great. So the incumbent president, Nana Akufo-Addo, is recontesting. What's your assessment of his economic impact and, of course, reforms so far?
Okay, thank you very much, my brother. I'm very excited to be on your medium this afternoon. Everything is cool in Ghana, especially in the capital, Accra. His Excellency, the President of the Republic, Nana Addo Akufo-Addo, seeking a second term, has become a very soothing story in the ears of many Ghanaians. This is because the President is one unique person who sought several times to be the President of Ghana. I'm sure we have these records. He's lost several elections, both in his party, the New Patriotic Party, and also the Ghanaian general elections. He lost about 2-3 elections before eventually he had the opportunity to rule the country in 2016. Fast forward, yes, a lot of promises were made. You can imagine a party emanating from former President the J.J. Rawlings, that is the NDC, the National Democratic Congress in Ghana, ruled Ghana for a very long time. The New Patriotic Party had the opportunity of President Kufuor, which we all had very sterling leadership over 8 years. And immediately after, the party lost power and, of course, regained power again in 2016. Some of the economic improvements currently that we can all boast of, we have a very stable the CD to the dollar rate, very, very stable for some time now, irrespective of the COVID, pandemic. There has been lots of jobs for young people. There has been lots of construction in the area of sports infrastructure and road construction, housing, and hospital buildings, a whole lot in order to impact on the economy of Ghana. This has been very spectacular in the sense that a lot of Ghanaians are looking forward to more of these things from the New Patriotic Party and, of course, the leader of the nation at the moment, His Excellency, the President of Ghana. We are looking forward to, indeed, improve on these things. IMF was indeed dictating the pace for Ghana as far as economics of this country is concerned, but when His Excellency assumed office, within a couple of months, we were able to wean ourselves off the claws of the IMF. As we speak,
all right, Kwame. For lack of time, I need to let you go on this. But Kwame would like to wish Ghanaians the very best of luck in their election come December 2020. Thank you so much for your time on the program.
Thank you very much.
Thanks, brother. So let's move on now. Morocco's trade deficit shrunk by 18% to 100 billion dirhams in the first 7 months of 2020. Now, according to the foreign exchange regulator, Moroccan imports dropped by 17.5% to 240 billion dirhams, and exports tumbled by 17% to 140 billion dirhams from January to July. Now, energy imports, including gas and oil, fell by nearly a third to 31.6 billion dirhams due to lower prices. Travel receipts, which is key to Morocco's inflow of hard currency, dropped by 44.1% to 23 billion dirhams, while remittances from Moroccans living abroad fell by 3.2% to 36 billion dirhams, and FDI slid to 21.5%. Now, South African state companies have requested billions of rand in funding from the government to help them weather the impacts of COVID-19 pandemic. According to the National Treasury, the South African Post Office has requested for 4.9 billion rand. SABC is seeking 1.5 billion rand, and airports company ACSA applied for an equity injection of 3.5 billion rand. Alien Power Utility Eskom's financial performance was worse than budgeted for, while AMS fell. Daniel faces the risk of entering bankruptcy protection or being liquidated. Loss-making state companies have long been an Achilles heel for Africa's most industrialized economy, requiring bailouts that have placed its public finances under huge strain. And the South African FTSE and JSE Africa All-Share Index rebounded by as much as 1.7% on Tuesday, its biggest daily gain since August the 5th, led by the miners and, of course, tech firm Naspers. Now, investors cheered the latest PMI data, which showed that the country's manufacturing sector grew solidly in August, helped mainly by the further easing of nationwide restrictions to level 2. Also, better than expected factory activity data from China lifted optimism over a global economic recovery from the pandemic. But it's not so cheery news for the financial sector, as the future shows a drop in half-year profits and anticipated job cuts, as well as sectors that strive to reshape and recover from the impacts of the COVID-19 pandemic.
South Africa's financial institutions are taking a hammering as consumers and small businesses struggle with debt repayment. South Africa's Old Mutual's interim results tell the story of results from companies around the globe. But the outbreak of COVID-19 impacted the business operations and profitability severely. The Pan-African Investment, Savings, Insurance and Banking Group announced that the pandemic has so far cost Old Mutual at least 2.8 billion rand. Meanwhile, Nedbank reported a 69% drop in headline earnings for the 6 months ended June 2020. Last week, Absa Bank reported a drop in half-year profits of 82%, with a four-fold increase in loan impairments to 14.7 billion rand. And Standard Bank reported a 43% drop in half-year profits. Bidvest Bank has served its staff with a notice of possible retrenchments. The group said it has been negatively impacted by the COVID-19 pandemic, and to ensure its long-term sustainability, is reviewing its operations to realign the bank to the current economic climate. It anticipates that over 400 employees in its personal banking, business banking, and support services will be affected. Not only will the economy have to contend with consequences of the nationwide lockdown, it now has to deal with a further rolling blackouts, which comes at the worst possible time for the South African economy.
Any disruption affects the productivity of your factory. So that is something that is quite negative. But something that's not often spoken about is the impact on investment. So if we're seeing that companies are not going to be building factories or warehouses or shopping centers because they can't get electricity, that has a negative impact on the industry and its recovery.
Eskom announced that the heightened risk of load shedding will haunt the South African economy for another year. And while motorists expected a slight decrease in petrol, The South African Department of Mineral Resources announced its monthly fuel price adjustments for September. Motorists will be paying 1 cent per litre more for both grades of petrol, while diesel will fall by 21 cents per litre.
And that's it on Business Incorporated today. Thanks for watching. I'm Temple Ashaju. Of course, I'll see you next time. Bye for now.